What's up, guys? Sam calling in from a beautiful San Francisco evening this Saturday, the 9th of June. Hope you're all having a great weekend. I had a pretty interesting trade in Snapchat last week in their calls, and I wanted to run you through it because I think there's a lot to learn from it, both in terms of my reasons for getting involved, my entry, how I managed the trade, how I ran my best winners, and in particular then my reasons for getting out. So we can jump straight into it. We're checking out the daily chart here in Snapchat. It's obviously had a very volatile year or two since its IPO, back up at around 30 um, last spring. The company's had trouble convincing investors that they're going to be able to meet the revenue forecasts that is hyped up so much, and every earnings report has been very volatile, going back to last January, the previous November, and obviously most to date this past April/May. Came out awful earnings, stock gap down 25% overnight, and this was immediately on my radar for a bounce play, and not something I was going to be getting involved in just yet. When there's a fundamental shift, just like you would have seen with the earnings, the market has to reprice, it has to rebalance based on the new information, and that's not always going to take less than a day to happen. It can often be drawn out over a couple of days or a couple of weeks. So it was on the radar. It wasn't something I was going to jump into just yet, but I was definitely keeping an eye on it. It was on my watch list, and I was referring back to it every couple of days to see how it was trading, how it was acting up. Let's zoom in on that period then in particular. So it comes off this 25% and it starts basing around, puts in a low around 1050 on the 3rd of May. And from there then we can see there's a small bit of a bounce. It's failing. A few tight days. It comes right back down on the 15th of May. It tests that low almost to the cent. The following days tests it again, holds. Now it's starting to get really interested. If it's not going to take out those lows, then it's naturally going to go up and test the highs. That's the way you got to be thinking about something. It's knocking on the door all the time. There's no answer. It's going to go to the other door. Came down again. Second last trading day, May, then it started making a bit of a move. There was a strong bounce. Continued into the 31st. And this is where I started making my move then. So this is a Friday, the 1st of June. Once we cleared above the 1169 level, we'd done that the previous day on the Thursday. I was happy to be getting along the Friday. Even though it had come off, it still rallied back into the close. And while it wasn't at its highs, the rally into the close gave me the confidence that people were happy to be getting long over the weekend. There was a good chance that this was going to run away from me on Monday by the open if I wasn't going to get in there and then. So on Friday, I picked up some June 15th, 1150 calls, expiring in 2 weeks' time, pretty much at the money for 40 cents. I was happy to be getting along, even though there was a bit of weakness on that day. I'd worked some pretty nice entries if I'd had them. I was wary of it kind of coming right back down. There was buying into the close. I was happy to get long. Took it about 40. Straight away on side the following Monday. I think Citron came out with some bullish news on the Monday or the Tuesday, which really helped the trade. But overall, I think it was looking good to move into that gap area regardless. I was getting good outs on Monday straight away. I got a half the position off for 75% gain. Again, I was happy to get off from a risk management point of view. You know, you take half off, it allows you to manage the second half a lot better. You're thinking rationally. There's no way you can actually lose money. And so you can really try to run the rest of it as opposed to kind of biting your fingernails and you're not able to look away from the screen if you're trying to run absolutely everything up to the moon. So it's a strategy of mine that I've used with great success in the past couple of years. So half off for 75% winner on the Monday. Strong open on the Tuesday. I got another part of the trade off for 145%. Those outs were going off at just about $1, and for my entry at 40 cents. Same day I got hit up here for about 250, 260% in some outs. I was really looking forward now to some big juicy 400, 500%ers into the weekend up around the 14 level. The highest prices I saw the option going at on the Wednesday it was $2, which would have put me at 400%. I was working a bit above it here. I thought now, given the run we were having, it was going to keep going, and I was happy to work those winners given I'd gotten great outs already. I was fully in control. However, there was a decent bit of weakness. We were coming off these levels here. Tandem that with the G7 geopolitical volatility that was starting to creep in, plus I was feeling tech was starting to get a little bit hot. Amazon, I think, was coming off a run of 9 or 10 green days in a row. Nasdaq was hitting all-time highs one day after the other, and Snap was definitely benefiting from all that. But this wasn't a trade I was looking to hold long term, and this was very much short-term opportunity that I was able to take advantage of. So I whipped off the last bit of the trade at the same prices that I got in the second last bit off, 145, 146. So still giving me a 265% winner. Saw the selling then come in on Thursday. Was really happy I'd gotten it off. And now, obviously, it stabilized on Friday, and that's totally okay. The stock can base out here, the stock can go again. I'm after being very, very lucky in the sense that the trade I planned, the trade I wanted, occurred just as I expected it to. I was able to manage the entry. I was able to have good reasons for getting involved. I was watching the technicals, for example, so along with the stock basing down here at the 1050 level, the RSI was starting to creep up, and the MACD had crossed over on the 21st. So my reasons for getting in were very strong. My timing was very good before the close of the weekend. I was onside straight away. I had half the trade off. I was getting good winners, 200, 250%. And I had a good reason for getting out. Tech was getting hot, and the stock had come back pretty hard off the resistance set up here back in April, back at the start of May before it gapped down. So good reasons for getting out. If I'd been offered a 150, a 200%er this time last week, yes, I'd have grabbed it with both hands. So that's the way you got to be thinking about it. Don't be upset you didn't get the absolutely, top end outs that were going. Be happy that the trade turned out the way you wanted it. Be happy with the winner, and on to the next one. That's it, guys. Any thoughts, any questions, let me know. You can comment on this video. You can reach me on Twitter at Quirke Capital. Always happy to discuss ideas, thoughts, musings. I'd love to know how you would have traded this, if you'd have done anything differently, if you saw anything different. Maybe you're in the trade with me. Take care. Have a great weekend. We'll catch up next week.